It's 12 o'clock. Welcome to Taking Stock on Monday, the 23rd of October, 2023. I'm joined by John. He's only human. Have you heard that before, John?
No, never.
Yeah. Marvelous stuff. Anyway, so listen, you would never guess, John. You will never guess this. This is a bit of a shock and surprise here. The AIM all shares down again.
Oh,
look at that. It's literally... Is there no end to this? Is there no end to the fall? 48% down, 777 days from the high on the 6th of September 2020. The question I'm asking, by the way, if you're watching this for the first time, don't forget, hit that subscribe button, please, and hit that like button. And of course, people will find it. The more people find it, the more likely you are to continue whittling on at 12 o'clock each day. But this is the thing I'm asking, John, right? What are the chances of a Santa rally? Because we are literally less than 2 months away, trading days, till Christmas. Because Christmas is on a Monday, and so it'll be the 22nd is a Friday. So we are the 23rd day, 2 months away from Christmas. What are the chances of a Santa rally? There's a little survey out there, but by all means, in the comments, Santa rally, yes or no? What do you think?
Statistically, 75% chance.
Yeah. Well, I did. This is my weekend. I love it. So the data is always best from the US. They've got so much data over there, and everything compared to the UK. But since 1950, apparently the S&P 500 has gained an average of 1.3% during the 7-day Santa rally. And make no bones about it, the Santa rally starts quite late in December. It takes place. It's gained 34 in the past 45 years. In the UK, from 1985 to 2015, the FTSE has made an average gain of 2.26% in the last month of the year, rising in value 83% of the time. So what about AIM? So this is what I spent my weekend doing, not all of it, a little bit. I went through the charts on AIM, looking at the last quarter and December. In the last 10 years, it has risen 70% of the time in Q4 and 80% of the time in December. So based on historical stats, it's a good chance it'll happen. I think the fact we've been sold off so much, and the RSI, like I say, is down about 16 days in a row now I think we will have a bounce. But of course, there are other things at play here. There's a lot of worry around the world on every level. I mean, look at that. The RSI is down and continue to drop down further. So, but they can't stay down there for that long. When you do, the longer it stays down for, it's almost like coiled spring. The more chance of rebounding,
Yeah, I mean, you are seeing big rebounds in individual equities, so you would you'd expect that to kind of spread at some point. But it's hard to see catalysts at the moment. That's the problem.
Yeah. But that's when it happens, though, isn't it?
Yeah,
I mean, do you remember that time when the big sell-off of the COVID dash for crash, and everyone sort of went to cash, worrying, and then all of a sudden, they just started rallying like crazy. People say, can't rally that far. The economy's shut down in the world. The companies can't earn money. All that. But it rallied tremendously strong. And most people are caught, without any stock, short or whatever. So you can have surprise rally when there's no seeming catalyst. Sometimes the catalyst is the fact that it's been oversold for so long.
Well, if you remember during that COVID rally, there was a lot of sort of money floating around. So you always had helicopter money over in the US, a lot of which found its way into risk assets. Bitcoin went crazy during that period, if you remember. And over the UK, obviously people were sitting at home and the wages were totting up. So a lot of that money found its way into the market as well.
Yeah, but look at this, Joe.
That catalyst isn't there this time.
Look at Bitcoin though. Bitcoin is a very good barometer of people's risk attitudes, and I know this is an ETF, apparently floating Bitcoin ETF, but this is this previous support of 30,000. It's really up there. It's trying to break it, So and it's way off the lows, going back of 16,000.
And Bitcoin's it's a funny one because it did start trading very much like a sort of a risk asset, but the argument to hold Bitcoin is that it is a store of value, that it is a safe haven in a similar way to gold. So now the sort of frenzy is over. It's sort of you might expect it to behave a little bit more like what it's supposed to be, which, as I say, is that store of value.
Yeah. Here's the
And
UK markets. FTSE down 0.5%, pretty much all down 0.5%, even AIM all share. Winners, narrowly winning, but Flutter, Fraser's, John's favourite Ocado is up there. I don't know what Mike Fraser's doing. Mike Fraser just buys up anything that's falling, doesn't he?
Mike Ashley.
Yeah.
Yeah. Well, he's a high street guy. He just wants to buy up. He buys up lots of brands and then sort of integrates it all into the group. I've always liked his strategy. It's a good one.
Yeah. I'm a high street guy. Miners are down there. Look at that. For Neo, Anglo American, Glencore, well, BP is down a little bit. So it's a lot of Antofagasta, all the big thing. In the FTSE we've got to, in fact, it's in the headlines. Say Vistry is down 5.3%. They come up with some figures, didn't they? House builder.
Yeah.
They got affordable housing recently. Isn't that the case?
It's shifting to what it calls a partnership model. So it's rather than sort of selling privately, it's selling through sort of housing associations, that kind of stuff, in partnership with housing association, housing providers, affordable housing providers. I mean, there are some sort of questions over this strategy, but as you'd expect from the house builders, a house builder, the numbers are fairly soft.
Well, do you know what? I got an alert today on Persimmon, and let's look. And I think they are now at a 52-week low. Yeah, there we are. Look at that, 52-week low for Persimmon, even breaching the previous lows in the July of this year. So that's not looking good. What are the other ones? I mean, Taylor Wimpey is
but they're all going to be moving in the same direction.
Taylor Wimpey is still higher than it was back in October last year, though. So it's not 50. Very interesting. So let's have a look at. In fact, let's go to some comments on what do you think. So Richard Sander Valley, hopefully so. GB62, yes, markets do some relief, aren't they? Yeah, I believe that. It's a massive relief due. Super Mono, ho, 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 hope so, he said. Simon Evans, US 10-year Treasury yield has just broken 5% barrier, so it could be an interesting week in the markets. The Magnificent Seven have also broken the technical uptrend on Friday, I believe. Tom says, my predictions are always wrong, so there will be no Santa rally. Yes, I like what you're doing there, Tom. Reverse psychology for the markets. What is going on? I don't understand with the bond markets. It's really a bit scary. I said, if you can get 5-6% in a savings account or in bonds, or whatever, why would people go for? Look at this. Let me just. There's a 10-year. There is a 10-year. Yeah,
but that's exactly right. That is a headwind for equities. By the way. That is a clear headwind for equities.
Look at the American bonds. Look at that. That's 10-year. Really is powering away the yield. Of course, that means that the bond price is dropping there. So anyway, let's look at the front page of Vox here. So a bit of content. Paul's talking to fund manager. Always good because they go through a lot of stocks. And they Joe Hamburg Capital Management. Michael Ulrich is there. AFC. In fact, we'll cover this in a bit. I just want to look at the thing because this is an amazing announcement. I don't know if you saw Upland here.
Yeah.
It's done the trifecta here. The 333, most followed, most read, biggest riser.
Yeah.
And so, did you see that? I just
takeover speculation.
Yeah, but this has had an amazing rise anyway. Upland. If you look at where it's come from, it's come from like down here at 0.4, almost 10 bagged here, and now today, and we were at. Today was what? It closed last week at 2.94, so sub 3 pence.
Doubled. Shares have doubled today.
Yeah. Well, I mean, nowhere near where the offer is. So literally, it's double again for the offer because they said the board, response to speculation. Where's the speculation coming from? The board of Upland confirms received an unsolicited, very preliminary approach regarding a possible offer at an indicative price of 14 pence. The potential offer referred to the approach. Now, the board has unequivocally rejected the approach as it believes it significantly undervalues the current potential of the company. What's the market cap this then?
What's market cap? 66 million. Yeah.
Wow. And there's another double. So they think even at that, what would be 130, 140 million, they're saying it's undervalued. I'm not joking. That if you're holding that stock and you wake up on Monday morning and that RNS comes out, it makes you weak, doesn't it? You think, oh, yes. Yeah.
It would be a nice start to the week, absolutely, if you'd been holding them.
Yeah. But that's very rare you see that. Most followed, most read, biggest riser. So that's some good news there. Okay, let's get some content. AFC, I thought was quite interesting.
Yeah. I'm intrigued by this company. Basically makes fuel cells, and the real big play for AFC is replacing sort of diesel generation in the construction industry. It launched a joint venture with Speedy Hire, the sort of construction equipment hire company, to basically supply these hydrogen fuel cell based generators. And actually, to get hydrogen to power them, you've either got to sort of transport it in, store this stuff, but they're working on a machine that essentially splits the hydrogen out of ammonia. With very, very high purity. It creates what you need to actually use these things in fuel cells, to use ammonia-based hydrogen in fuel cells. So they've made a lot of progress on the sort of technology front, a lot of progress with their sort of product range. I'm starting to put some really interesting deals together. A lot of case studies, a lot of test studies out there for what it's doing. Not yet really translates into revenue, but what they're saying here is they've got a path now to actually really commercializing this.
Yeah, it's not as catchy as what's the tomatoes thing, but they've got ammonia cracker technology. That's good there. So it cracks the ammonia there. So it takes it from NH3. It breaks it down to hydrogen.
It's ammonia, yeah.
Yeah, and they're saying that it's successfully achieved 99.99% hydrogen from single reactor testing. I don't know about you, but that seems quite high.
It's pretty pure. It's pretty pure. So there's standards around this stuff, and it's got great technology. The company has great technology. As I say, numbers wise, it hasn't really translated into significant amounts of revenue just yet. So what did they do last year? 0.6 million in 2022. But they're on track to do another 0.6 this year. As I say, it's they're in the sort of tech phase, but now they're going to shift to commercializing it. 6 million in 2024 and 17 in 2025. Big push to clean up sort of the construction industry.
You find at the top of the bull market, all the high potential stocks do very, very well. Look at that. I mean, it did hit like 90 pence a share. We're now at 13.6 pence. And even this today, it's some really odd fallers today. I mean, it's not even up, on this. It started up, went down. It's up 1.4%. But it's very hard to move some of these stocks. And I tell you, it's very odd, I thought today, was some of the fallers I didn't understand. I was looking at some of the fallers today. I understood this one.
Goodness, this is a shocker. That's a shocker of a statement.
They did say it's trading. The revised outlook and all that stuff is it's not going to be good for the Mission Group.
Really bad.
What do they do?
Digital marketing.
Oh, okay. Oh, there we go. So they're in that area where they, Okay.
But we've seen it. We've seen it across this sector now. The marketing industry is really struggling. But marketing budgets are getting slashed across the board. And, they've had to revise their guidance fairly quickly. Trading has deteriorated very, very quickly indeed.
Yeah. But two, I didn't understand. Velocys, right? They announced the launch of their Ohio technology facility. And the shares are down massively. Is it just the time frames or what? They're saying production from mid-2024. And then, the capacity to meet projected orders by 2028. Is it? I don't understand why it fell off. It's fallen down massively. This one was also a bit of a high potential stock, but it's like I said, with all stocks, it's come off there. So,
I mean, this is again, it's a sort of scaling up story, very much like AFC. Not really generating a lot of turnover at the moment. 2023. In the current year, half a million turnover, and then 4.75 the year after that, 10 the year after that. So there is an expectation that we've hit that commercial inflection point. Now we're going to scale up, or Velocys is going to scale up. Maybe people were hopeful that it would happen a bit more quickly than this statement suggests. And at the same time, as well as scaling up revenue, these companies have got to shift to profit, and they still forecast very, very heavy losses for a few years yet.
Yeah. Super Mono says, "Where's the fun in a 5% bond?" I agree with you. Sometimes life isn't about a boring return. Sometimes life is a little bit about having a bit of fun, and actually, exactly. When you research companies, you can learn stuff and you get a bit of enthusiasm about them. Bonds, I do find them boring. Bonds.
Yeah,
Anyway,
but you know, and there was a sort of, you know, this idea of portfolio construction, you know, modern portfolio theory, 60-40 portfolios, you
which
know,
has been
60.
hammered.
Well, it has been hammered, you know, because we've been in very
Mm.
unusual times. But, you know, it does seem that the sort of 60-40 approach is starting to
Come
kind of
back.
make a comeback.
Yeah.
And you know, bonds do a job, you know, and
Yeah.
they're, you know, they're a risk management tool essentially when the correlations between bonds and equities are working as they should be, which they haven't for quite some time. But we are getting back. We are seeing it, you know, it return.
Yeah. Chaps, any steer on a trading app for graphs and sending alerts? TradingView isn't free, and the cheapest package is a bit more than I want to pay. No, it'll cost way too much to do that. But we already have first in class RNS by notification. If you haven't got that, download the app. But I mean, no, I mean, you know, it's hard to replicate the TradingView #1 in the world charts. I think I'd say we're #1 in the world for RNSs by notification. That's the way forward. So if you haven't downloaded the app, go for that. Big earnings, which it says in the week in the US, could provide a catalyst one way or another. So looking for the catalyst, maybe could well be a Santa rally. October 1st, traditionally a crash month, key week, I think. Yeah.
The problem with the US earnings season is that, you know, whilst, you know, we're looking at AIM and, you know, it's really sold off quite, you know, quite dramatically. You actually look over the US and, you know, the sort of Magnificent Seven that we've already referred to, you know, they're still, you know, pretty punchy on pretty high valuations. That, you know, that have a look at the chart for the S&P 500. You know, it isn't anywhere near as horrific as AIM.
No, I know. Let's go.
Yeah. So, you know, there are expectations there that have to be met. I would say that's a bit of fragility. It could go either way.
Yeah, and also with S&P, it's very distorted, like I said, because of the the Magnificent Seven. They're absolutely they of 500 companies in the S&P 500, the Magnificent Seven account for 50% of the valuation out of 500 companies, which is nuts. It's so distorted. But even so, this is a worrying chart. You can see here now. I mean, previously when you saw, you know, a high and then, you know, like I said, a failure to break the previous high and it rolling down and then across the 200-day moving average. This was back in January 2022. This has happened again now. This doesn't look very good. I mean, we've got a couple of lower highs here, 1, 2, 3, 4, and then almost that support here that we had in the last few days has been broken again. So this seems weak. It's breaking the 200-day move. The S&P, I assume, will roll over a little bit, but whether that comes off the frothy, you know, big tech stocks or big Magnificent Seven, because I mean, if you look at Russell 2000, which is in the smaller cap indices in the US,
yeah, that's
no, look at that. That is nowhere near. It's not rallied like the S&P. It's been in a range, and in fact, if you look at that, it's broken down that channel, and it's on that, you know, it's going towards that previous lows of 1650. So that's you know a more you know, sort of spread out sort of view on that, more fair view. So look, some sort of scam, I suppose. Chinese anonymous company. Oh, what's that? Was that to do with what? Upland, you're saying? Oh, okay. What are we doing now? Is he just surmising that, or Tim? Because we can't. Sort of,
well,
I don't know. Well, it certainly helped the share price anyway. Sean, AFC Energy, yeah, 600 grand in revenue and over 100 million valuation. How far into the future are investors pricing it? There is that. The green hydrogen plays are very highly valued, aren't they? The people obviously seeing that as the future in some way.
Well, they raised a lot of money, all of them, and I think
Yeah.
AFC's got about 32 million quid left in the bank.
Yeah.
So you know, it's got. I mean, I wouldn't say that it's a wash with cash, but there's a fair amount of cash in there. You know, you look at ITM and Ceres; they've all got a lot of money in the bank. But you know, this as you say, the technology does, you know, get into that real commercial inflection point. Profitability, most importantly, does seem some way away still.
Yeah. So Sean has asked there on Audioboom. This Michael Tobin, he's a bit of a character, Michael Tobin, OBE, worth checking out his personal website. It's got a lot of pictures of him with celebrities, but he's been buying all the way down. Now, you know, Sean, I mentioned my thoughts on Audioboom a while back. First of all, I missed out on 10 baggers, so I'm maybe a bit bitter. But having looked into it, I do liken it to almost like a football team. You have to buy in talent, and it costs a lot. You know, this talent comes with their own audience, pretty much. To grow a podcast from nothing to millions is very, very hard. So the margins are very small. And even the top line seems to be back to growth mode. There's very little room for generating cash from that, because
it's
very obviously advertising as well is being hit as well in this market, isn't it? So
it's a very tricky market podcast, and I think as well, you've got a lot of sort of major media groups who are increasingly investing in podcast content. A lot of celebrity podcast content. It's a changing market. It's heading the way that most markets that are successful do, and that is towards the bigger players.
Yeah, I would say, for a start, it needs to break 180. That's the previous high. It broke down from there. It needs to break 180. So 142 now. It's starting to end that downtrend. I mean, because there's been a horrific downtrend. Look at that, from 22 quid. A lot of this, say obviously when you see a high, next high, and then it break down. But yeah, that was, I think a lot of this was a lot of speculation about them being taken over by Spotify or Google all here.
That's a long time.
So that wasn't based on, and they had top line growth as well there. And I saw that they also went to profitability there. So there's a lot of good catalysts hit there. But they are, it's a high cost business to acquire talent like that. Okay, let's look at the front page. We got there. One Health.
One Health.
Some stats from this. They've done some figures. They're quite good, actually. I've never heard of them before.
They're Aquis. They're Aquis.
Oh, okay.
A lot of Aquis. I mean, it tends to get overlooked, but there's some really nice little companies on there. This is one of them. So basically, hiring clinicians to do a lot of sort of stuff that the NHS is really struggling with, backlogs, elective procedures, that sort of stuff. Lots of demand. It's expanding, it's adding new doctors. It's planning a quite large hub for surgery. I mean, an NHS waiting list just continue to grow. It's a real problem, and One Health is, like a number of companies we've spoken about, is there to kind of support the government in working its way through these quite significant backlogs, and it's translating into really nice revenue growth for this company.
Yeah, look at that. Revenue for the first half of the year. So they're a 16 million market cap. It was 11 million. That grew by 12%. So you assume they'll do 22, 23, 25 million. So, and yet the cash went up. So, it's provided substantial resources for continuing investment and growth, with operating cash generation underpinning the group's progressive dividend policy. Yeah. That says a lot of companies on AIM would love for that, kind of cash generation and dividend policy.
Yeah, I mean, it's it's a really. I was just bending down to look at something. I like these sort of companies that are, as I say, relieving the burdens on the NHS. But I suspect, there are some politics behind this. I guess, some people will say this is the creeping trend towards privatisation of the NHS, and won't like it. But unfortunately, we are where we are, and these companies are very, very necessary, and doing a good job for investors, and getting through these waiting lists as well.
I don't see the problem. If people want to pay privately, what's the problem? I don't see what the problem is. That, I mean, it relieves pressure from the NHS. I don't see the problem. If people want to pay for it, they got the money. They say, "Well, I'll save a bit of time. I go private. What's the problem?"
It's ideological, really, and the NHS was established to be free at the point of care for anyone in the country that wanted to use it. But that's it's increasingly failing to be able to deliver that. Demographics obviously a big part of that, and those demographics are only going one way. So. The politics are complicated. We won't get into them now.
Yeah, I know. Metals One. I hopefully interview coming out. Going to be chatting to Jonathan, CEO here. But preliminary results from drills there looking very good.
Yeah, look good
for nickel, copper, and cobalt, and of course it's in Europe. And if you look into it, it's quite scary the stranglehold that China and Russia has on critical metals, and we need that supply chain in Europe. So this is a company in a good place to provide this. It's early stages, but early tests are good.
This is exactly what we were talking about towards the end of last week about, as you say, critical metal suppliers being close to the markets that need them. And Metals One is one of the companies that is doing that.
Yeah. Horizonte, of course, come up with a construction update looking up 2.8%. But remember, we've still got this funding issue overhanging, like a dark shadow, a grey cloud over the top of the company. They still, they still say the company's continue. Right, look at this. Just down here, about the 8th bullet point, the company has continued to progress construction activities while advancing financing discussions with its cornerstone shareholders and lenders. Yeah. So they're pushing ahead as much as they can, but that, of course, is going to weigh heavily. And if you look at the chart on this, there've been a lot of long-term holders to this, and to have that sort of rug pulled from underneath you in the last few minutes when they were supposed to go into construction in Q1, and all of a sudden they said, "Oh, hang on, we're short a bit of cash, and now it's going to be Q4 next year." Oh, cheers, thanks for that. That's nice. It's reassuring. What else is there on the front page here? ECR Shanta. Anything you've been looking at, John?
No, not this morning. Just been having a little read around the market, seeing what's going on. Having a look at some of the bigger companies. Vistry, I was having a read about this morning.
Yeah, well, they're going to lay off people as well. Oh, by the way, Tirupati, we did mention this, didn't we? That
Again,
it's been a bit of a nightmare for them when the graphite price was weakening, but all of a sudden, China's come out with a statement saying they're going to limit, graphite exports.
Yeah, again, resource nationalism at play. I mean, it's sort of that you would expect that to have an impact on the graphite price. A positive impact on the graphite price, which will be good for Tirupati.
Yeah,
and Greenmont when it gets its mine built.
Yeah, so rallying there, but still, even with he's a 20%, 27% rally, they are at not far off the low. So it's nowhere near an uptrend there, but hopefully that'll shore up that thing. Any more chat there on the thing? Let's look. Hi guys, any reason why Upland is currently only 5.75 mid price after news of 14 offer? It doesn't sound like the market is believing a very yes, that's
very preliminary. It says very preliminary is the reason.
So first of all, they've chosen to reject it. Now, if that offer comes back and it goes higher, it's fair enough. But if they reject it, you've still got to generate your own value from that, haven't you? So, so maybe the market isn't, thinking they accept it or believe it exactly. So who knows? But what else is there? There's also going back to your previous view on Upland. It's beat its 52-week range, long-term stock to hold next 10 years. If you want to see that 100 bagger, all right, Fredo. Listen. One of the best times to get into high potential stock is before they're actually doing anything significant. When they have to start raising money or getting debt finance, all that, it becomes complex. And if you look at Horizonte Minerals, that's that's where they run into problems. So
what do they say? Buy on the rumor, sell on the deal.
Yeah.
It might be further to go. Might get closer to that 14p.
Yeah. What's better? What is Informer? I think prodding you, John. What has a better future, BT or Ocado? Oh, there we are. Well, John knows what it is. BT or Ocado, John? Which one? Big tech have no debt. There we are. Oh, is Ocado got any debt or not? I don't know. John owns BT. I don't think just to remind, John owns BT and he hates Ocado. But,
I mean, I think BT is, it's a critical part of the nation's infrastructure.
Does it mean you get a return though?
I mean, I'm not doing too badly. I mean, the shares are down on an absolute basis, but the dividend is somewhat making up for it. So it's not a disaster. But I do think, owning infrastructure is good. BT has not been a great performer, very difficult company to run. Got some new management in there, so I'll stick with BT. Ocado, I feel it's a solution looking for a problem. That's how I've always felt about it.
Yes, BT's a difficult company to run. It's a difficult company to hold as well. If you're doing well, when did you buy these? When did you buy these then?
I think. When did I buy them? they were well up, probably around there.
Where?
Late 20, early 21.
Okay. So you bought them at low there.
I had a lovely little rise, and I was thinking, this is easy. This malarkey.
That's when we all fall into problems. Do you know what? In fact, one of the biggest mistakes an investor can make is actually doing well, especially as a new investor. If you start doing well in the first year, if you join the bull market and everything's flying, be aware. It's never that easy. And sometimes, even if you have a winner and you're quite experienced, you can say, okay, let's get into another and start, dropping your quality filters a bit. And then you start picking some rubbish. And that dilutes the initial gain on the first stock. But no, as I say, that has come back down. There's what's quite encouraging there. As long as, in fact, do you know what? Even my fund is down today at pretty much an all-time low. But look at that support there. Let's see, 110. It's at least it's above the previous pound level in 2021. But look at this, IUKD. It's literally a a fund of the 250, and even that, I mean, if you scroll out there, it's it's threatening to break. It has broke previous support here. Look on that level. I said don't mind because it's my biggest holding, but it pays like 6% dividend, and it pays quarterly as well. So don't mind. And I'm average, I'll be 50 of the biggest high yielding stocks. But that just shows the weakness in the market. It's not been down there since a couple of years. The market is very weak, which contrarily is quite good, really. It is good. Ocado. Let's get Ocado's chart then. How is that performing? Surely, if you bought that in. Oh, yeah, it's
not well recently. Is the short answer?
No, it's rolled over. It's rallied here. Look at this. High there, a lower high, and it's just broken down. It's really gone to 200 moving average. Yeah. Oh, that's an all-time low, isn't it? Oh no, it's come back. Nice rally from 2017. Look at that, 2017. What is that?
Well, they started. Well, they started
a cracking rally, isn't it?
Yeah, but they started to position themselves more as a solutions provider than a supermarket, than an online retailer.
1100% from 2017 to
So this sort of thesis emerged. This was a tech play rather than a food retail play. And obviously they've got this JV with Marks and Spencer, and the real prize for them is selling their robotic solutions, their warehousing distribution solutions to other retailers. But we did see lots of sort of deals being signed, but we don't know much about them. This is the problem. It was all a bit black box, and I'm looking at their forecasts. 2025 is still just the the losses just mount up and up and up.
Yeah,
they'll tell you to make a profit at an EBITDA level, but I don't care. They've got big warehouses and vans and huge amounts of depreciation.
Yeah. I know exactly. You got to be wary of companies that do EBITDA when it's not appropriate for them. So let's. Dexter says on Upland, Upland didn't disclose the legal entity details of the bidder. Why would SEC Capital buy? Why would they buy in the open market if they saw such value? Looks dubious. That's a very good point.
Well, it's hard to buy a position that of the whole company. Basically, you could acquire a position as a starting point. But it's very rare.
If it doubles, if it was a 33 million market cap and they were being buying at 3p, it probably wouldn't go up to 14p, would it? On that, I don't know. I mean, I think they probably could have got a big chunk in the market, enough to vote, to a majority shareholder.
That's what you would have. That's what you would have thought. It certainly wouldn't. You can't. It's impossible almost to acquire a company outright through the open market, but certainly building a position. A la Mike Ashley, as we talked about earlier.
Yeah. Simon says Ocado is a loss-making stock, a story stock. They don't even own most of the real business. Okay. Regarding Andy says HZM, lots of long-term holders. Company needs 188 million further funding. Any thoughts on the outcome? In this market, who knows? But they're far along the process, aren't they? Like I said, they're really close to production, so a lot of the equipment is in there. And I don't know, it's just going to be it's the worst market ever to try and raise money for funds and all that. So it's just hard. A couple of years back wouldn't have been a problem. I would think a key large shareholders would maybe want to invest due to the value of the nickel mines owned. But at what price further dilution? Yeah, that's it. It's Horizonte. It's a horrible, tricky market, isn't it? Do you know, where was the thing? I was looking at something here. I don't know who it was. One of the falls today on Impact, it was S47, S247. All they
Smart Tech 24/7. Yeah, I didn't understand.
It went down 10%. They announced some recent awards, showcases of excellence in the industry, right? And AI enhanced cybersecurity. And they got slammed. It went down about 16%. Oh, my word. So I was like, if you're going to show off about awards stuff, we're just going to sell. Being nominated for, as Deloitte Fast 50 Technology Company for 2023, and literally just sold off. I thought, what? Was there any numbers in there? I didn't see any numbers.
No. There was a really nice news recently as well. Yeah, but it's been had been a very decent performance since IPO. IPO in a tough market too. No, it's baffling, I have to say.
I do want to show you as well. I want to show you an example of a trend, a nice uptrend. Now, Director's been buying. Look at Time Finance. Look at that.
It's what I mentioned the other day.
We mentioned that. Yeah, you can't help but in fact, look at it, it's pretty much gapped above this 200-day moving average and moving up nicely. What it needs to do now is break this sort of level here, which is the previous high at 29.30 pence. But directors have been buying of this of late, and I think quite a few of them have over the last. Let me just look at time.
Numbers are really nice at the at half year. No, sorry, year to end of May.
So this director, look, Ron Russell. Okay, Ron, double R, purchased 120,000 shares in the company. So what's that? A quarter of 30 pence, about 40 grand maybe. But he owns now 12.48%. So a nice big chunk of that.
Skin in the game. That's what we like to see.
In the game, and it's going forward. It's nice. Yeah.
Yeah, and the shares are really not very expensive at all. So current financial year, that's the year to May 24, forecast P 6.8 times.
Yeah.
And you know, it's just nice looking numbers across the board there.
I would like to do, and if I got spare time, I wouldn't mind doing this because companies that hit, like I said, there's a saying out there saying never sell a company at a 52-week high, never buy a company at a 52-week low because of momentum, you know. I'd like to see the stats on that actually. Companies that hit 52-week highs, how far do they go on, you know, momentum wise? And in fact, any of your stocks hitting 52-week highs or 52-week lows, John? Have yet?
I don't know. I haven't looked.
Yeah.
Yeah.
One of mine has, yes, today actually, which is good energy, and you think the chart is going on, and I think it is good momentum there. When you get that, obviously the sellers dry up and buyers just come in, and in fact, look at this chart. Yeah.
No, is the short answer.
HVO's
not too far away.
It's a nice little chart. I just show this the breaking of support, resistance, breaking up, nice high there. So previous support there, previous high there, and it's breaking 200-day moving average and new highs.
Most of mine have sort of hit 52 highs and then come back a little bit.
Yeah. Honestly, it needs to break down against Hvivo. It does need to break this previous highs. That's what it needs to do. And run over. Okay, all right, that's it. Just on some bigger news or some business news. Have you seen this in the autumn statement? The government because his help to buy scheme again. Wow,
they're going to call it. Presumably, they'll call it something else. But yes, this is what we're seeing in those house builder numbers. That the help to buy scheme was so important.
Was it like I said 25 to 50% of the buys came from help to buy scheme? It's like that's huge. Now you got a catalyst of this rolling over, and that scheme not being there. Interest rates being high, that's hit home builders massively. But the government have not commented on this, but there's rumours this may happen. The Treasury has declined to comment. Of course, they're going to leave it to the autumn statement. Vistry, 200 jobs. Look at this. This is nice. Santa's wanted. A Christmas job vacancy jumped 25%. And so this is last year, 126,000 jobs there. And this is the biggest increase they've seen since they collected data in 2016. So this is quite good, along with demand for gift wrappers and snow clearers. Adzuna, also known as big grocers, Asda, Lidl, Tesco, accelerated their seasonal hiring. And Tesco's have announced 30,000 seasonal workers. People go mad for Christmas, don't they? They go mad for it. My mother-in-law, we got there for Christmas, and even though there's 5, 6 of us, that's all it is. She buys for about 18 people, 20 people. The food is phenomenal, and you see why all retailers will gear up for Christmas because people just got overboard, don't they? It's mad. That'll be a catalyst though for the Santa Rally. You know
yeah, absolutely. Yeah.
Do you like
other seasonal elves holding up the jobs market?
When it comes down to that, we know we're in trouble.
Yeah.
But are you a big fan of Christmas, John?
Not especially.
That didn't surprise me at all. It's the Santa Bear, the Santa Cringe.
I like seeing my family having a few drinks and sitting around having something to eat. But I find the best it was very stressful. I have to say. At least I no longer have to do Christmas issues of magazines and such like, which was horrendous. But no, I find the whole sort of retail splurge quite unsavoury.
Yeah, exactly. Yeah. No, it is
miserable.
It is.
The Grinch.
It is, my wife buys the kids for ridiculous. I argue every year about, I was filling a room with presents. It was, a lot of it's tapped. Just it looked like there's lots of stuff. No, don't do that. Killing the planet single-handedly. You. Anyway, last two comments then before we shoot off. GB62, defo a Santa rally coming, assuming Santa recruitment is okay. Yeah. And Rifus says the new name for the Help to Buy scheme is Help Not to Lose Vote scheme. Yeah,
Yes,
so that's what it's all about, isn't it? That is exactly what it's all about. Hit it on the head there. Thanks for watching. Don't forget, hit that subscribe button if you haven't, and download the Vox Machis app. It's free of charge. It's priceless. You'll never look back again. If you haven't done it in the next 10 seconds, do that. That's all it takes. 10 seconds to make download, and you'll be there. Cheers, John. Speak to you tomorrow.
Cheers, tomorrow.